Canada. Until now, they had 4 bullion trusts that had a total value of circa 13 billion across 250,000 investors. Now, importantly, as principal and as a fund manager, they've got extensive uranium equities holdings, which no doubt has brought their interest into the physical vehicle. And now we're a couple of months into the launch of what I'm going to call SPUT for brevity. So SPUT, it's TSX listed. Very importantly, it's both Canadian denominated units and US dollar denominated units. So their friends across the border are able to invest pretty seamlessly into this vehicle. Everyone in the uranium world needs to understand one thing. There are no redemptions. This is not an ETF that's going to be great on the way up and devastating on the way down. It's built into the trust document. They do not redeem. They will simply buy and hold. And even projecting forward, when we start to see a cycle soften, and we expect that's a long time from now, but when it does eventually happen, they will simply continue to operate as an investment vehicle that offers exposure, good or bad, to the uranium price. This is long-term sequestration. Now, where the action has really started is when SPUT launched their at-the-market facility about 4 or 5 weeks ago, and I'll show you the impact with that. Initially, they gave themselves 300 million worth of headroom under their shelf prospectus, but they got through that so quickly that they've bumped it up to 1.3 billion, and they've still got circa 800 or 900 million of that to go through. And then they just do it all over again. They can just simply amend the existing shelf prospectus to increase their headroom even further. This is a vehicle that's in perpetual motion at the moment. But wait, there's more. They're planning on listing in the US on New York Stock Exchange, which will open them up into greater liquidity and an even broader range of investors, including some retail and nano retail investors that have shown an interest in this sector. That's planned for next year, something that we don't need to focus on now, but we've got to look forward to. So what's happened? So here's the 5-year spot price, spot uranium. And I've indicated on that when the announcement of SPUT was made. Then, as I say, the action started when their at-the-market facility started working. What that means is every single day, if they're trading at a premium, and if the company's happy to do so, the trust is happy to do so, they can instruct their at-the-market underwriters to basically issue new shares. In other words, they will sell shares to buyers on the market and then quickly issue those and remit those funds to the company. So it means that they can be issuing units and buying uranium on a daily basis. And that is the effect that it's had in a very short period on the uranium spot price. It's pushed it up to about $50. It's finding a base there at the moment as we speak, but that's nothing short of dramatic. And in fact, rather than relying on hyperbole, I'll let you know that it is the single most rapid increase in the uranium spot price ever since spot price has been reported and recorded. So we are entering some very, very interesting times. Now, this is what they've been doing. So in the green bars, that is their daily spot market purchases of U3O8 since they launched the ATM facility. And then that golden line there is their slow accumulation, or rather rapid accumulation, of total uranium. They're now up to about 28 million pounds of uranium that they've sequestered, including what they bought from UPC, Uranium Participation Corp. And that might not mean a lot to you until I show you this. Until SPUT launched, that was the average total market spot liquidity in this sector, about 220,000 pounds per day. So as you can see, even on a lazy day, SPUT is almost achieving the total market liquidity before they came into this sector. So that's what's putting the upward pressure on the spot price. Even over the last few days, when we've seen quite a softening in equities and a softening in a commodity interest with what's happening in China, they're still playing the market. They've still bought another 200,000 pounds overnight. So they are having a big impact. Let's project forward just for fun and see what that could really mean. This is what I've called the uranium virtuous cycle. You see, what happens is we've got a virtuous cycle that's operating here in favor of SPUT raising more money through issuing more units, through buying more uranium. So what do we mean? Well, they use the at-the-market facility to raise more units and raise more capital. They buy uranium with that. That demand, as you saw from that slide, has created price growth. That's fueling sentiment growth across the board. That ensures that SPUT operates at a net asset value premium, which is the main precondition for them to then raise more money through an at-the-market facility. And so the cycle continues. And we've seen this cycle spinning on a daily basis because of the flexibility and the rapid fire nature of their at-the-market facility, combined with their capacity to buy pounds in the spot market almost every day. Now, where this cycle starts to spin even faster is when you look at other market players. So, of course, they're not the only player buying uranium. Producers are buying. We heard Cameco over the last week talking about that. Traders, of course, are buying. And we've just started to see utilities start to come into the spot market to buy their own material. All of that buying continues to price growth, contributes to price growth, contributes to sentiment, and so the cycle spins. Now, that sentiment growth, apart from fueling equities, is also fueling ETFs. And the two big ones, URA and URNM, have just crossed $2 billion in assets under management combined. Here's the rub. They own SPUT. So SPUT, for example, in URNM is 8.5% of their index. So every time that sentiment spins in their direction, they need to buy more units, which then spins the SPROT virtuous cycle. And whilst URA don't have SPUT because of a timing mismatch, by the time they do their next rebalancing, they will need to introduce SPUT. And so that will present an interesting trading opportunity that's going to give this cycle a serious amount of G-force for a period of time. Now, that means robot buying. As they raise money, that just comes into SPUT, spins that net asset value premium, and away we go. And of course, it's not only SPUT who's out there raising money. There's Yellowcake, there's Uranium Royalty Corp that's been buying physical uranium in the last couple of weeks. There's juniors who've got that capacity, hedge funds. And don't be surprised if amongst all of this, we see another vehicle opening up. That is what is getting investors very excited. That is what is creating a durability and a longevity to this current very significant price growth. And that's part of the reason why I'm so excited, and no doubt you're on this call. Now, what does that actually mean looking forward? So I've just put a few numbers there in terms of weekly average purchases. And if you accept the proposition that this is going to continue into the medium term, I've annualized those and represented current buying as a proportion of all of the uranium mined around the world. And that's where we're at the moment. We're running 2 million pounds. Now, if all of the uranium that was mined around the world was sold into the spot market, this vehicle would, on an annualized basis, be sucking up 80%. But here's the thing. Most of the uranium that's mined around the world is being delivered into existing contractual commitments. So this starts to open your eyes to the potential scale of the disruption that this vehicle could have on this sector. And as that disruption potential gets better understood, it's not going to scare investors away. It's going to spin that uranium virtuous circle even faster. Now, what are some of the market effects? So look, the most important one is by the end of the year, we're going to know definitively if there is so-called mobile inventory around to hold up the party. So there are some market commentators who've been keen to remind everyone that there is inventory in this sector, and they claim that a lot of it is mobile. Well, let me tell you, ladies and gentlemen, if that mobile inventory doesn't come out at $50 a pound, it doesn't exist. So we will know just how much mobile inventory there is or perhaps isn't in this sector. What it's already done is remove the carry trade. If you don't understand what that means, then you might need to follow me on Twitter or catch some of my YouTube commentary, because we don't have time for that now. And most importantly, what this has done is it has created a shift in utility sentiment from complacent to concern. Now, what's really important to understand is that against that, we've seen some interesting demand developments. So first of all, a number of US reactors have just in the last couple of weeks been saved from early premature closure. So what was going to be defueled just last week is now creating an immediate demand requirement so that those reactors can continue operating next year and beyond. And because of government support in the US, those utilities, both in regulated and unregulated markets, are somewhat mitigated against price increases. This isn't a gas type situation where the cost of the gas represents 75% of the cost of the electricity. The cost of U3O8 in a nuclear power plant comprises 5 to 10% typically of the cost of the ultimate electricity. And now, because of these government measures, that equation is even further mitigated because of some assistance that's being offered to operators in the US to represent their clean emissions credentials. Now, in terms of the supply response, you might be asking yourself, well, when might this party come to an end? And what I'd like you to understand is that there are no substantive supply responses on the horizon before 2023 at the earliest. Cameco has confirmed that they're 18 to 24 months away from the even earliest potential restart of McArthur River. Kazatomprom have committed to the London Stock Exchange that they will hold their current production steady until the end of 2023. And the other major mines that are on care and maintenance that have got the potential to come back on quickly, they're still, in my opinion, a couple of years away. So what that means is this can continue unabated by increased supply. And in fact, as utilities start restocking, there will be more of a competitive demand type of dynamic rather than a supply suppression dynamic. Now, this is some momentum that I've talked to in a previous broker briefing presentation. So rather than go over it again, please look that up. It's really worth your time, and it'll give you a feel for how this current momentum is backed by solid, large scale, really impressive market shifting fundamentals. So finally, uranium fundamentals. What does history tell us about all of this? I liken where we're at with decarbonisation, not to the last uranium boom, which was a spike that got cut short by the GFC, but rather to the uranium boom that we had back in the oil crisis. And the reason is that, like the oil crisis, decarbonisation is affecting, adjusting, and disrupting every aspect of energy and all of the interconnections with the world's largest economies that come with that. Last time that happened was the oil crisis. And for all of nuclear's superior energy production attributes, we can now add emissions free. So that is, I think, a very instructive history lesson as to where we could find ourselves as this cycle really picks up momentum over the next decade. And in case you think you've missed the boat, that's really what the last little uptick represents on that graph. And with the recent pullback in equities, I'd invite investors to use the opportunity to really have a close look across the sector, but in particular at Bannerman Energy, which of course is what I'd like to talk to now. Now, why are we outperforming most of the sector at the moment in terms of share price growth? So first of all, it's our sheer scale. Secondly, it's our extraordinary leverage to price. And thirdly, it's the fact that leadership has a track record of delivering, and we have ensured that non-financial risks have been pruned off this investment. So in terms of our scale, we've got a resource base of 208 million pounds, and within that, the Etango 8 project has a ore reserve of 60 million pounds. I'll tell you what that means in a moment. Here's an example of our NPV sensitivity. We start to offer extraordinary cash production as we move beyond our assumed price of $65 into whatever uranium price scenario you'd like to consider. And this is not an investment where you can look, where you need to look over your shoulder in case you get hit from behind. We've been very good stewards of capital. We're in a very stable jurisdiction. The project has low technical risk and is advanced. And very importantly, we have our environmental permitting and very broad community support. Now, here's what I particularly notice from the feedback we get from investors. Investors like the fact that they can invest according to whatever their uranium price scenario is, knowing that as this cycle starts to mature, that uranium price scenario finds its way into our bank account because we can produce in the upswing in this scenario. We've got that production capability. We've got robust economics at significant scale. There's only a handful of projects around that can match £3.5 million per annum. And that leverage is enhanced by our capacity to expand production, potentially up to £7.2 million, which is a larger scale project that we've already completed to a definitive feasibility study level. Again, you can find all of this on previous broker briefing presentations, but here are our Pfs outcomes from the PFS on Etango 8 that we very recently published last month. And finally, just to illustrate the scale-up expansion and the life extension potential that we've got at this project that further enhances our leverage. The left-hand graphic there is the pit design from Etango 8 at completion of initial 15-year mine life. That's at £3.5 million, through to the right-hand side, which is the final pit design after 15 years at £7.2 million for the DFS version of our project. You can see that we're simply operating within a already designed series of pit shells. So expansion is very simple with this project. That's our pathway to production in 2025. And that is where you can knock yourself out with technical information. We've published 113 pages of our PFS on our website and got a comprehensive presentation dealing through all of that as well. So look, in summary, talking about Bannerman in the context of this exciting phase in the uranium sector, we are globally significant with a £3.5 million per annum output, but with further expansion capacity. Our economics are robust. And we've now, with the Etango 8, got low hurdles to development. Crucially, we have our environmental approvals in place and we've got strong community and government support. Love to be in Namibia, and there is no better uranium development jurisdiction, in my opinion, particularly when you take into account its history and its excellent infrastructure. Our project is low technical risk, and we've done a DFS already on this project at a larger scale, and we've operated a demonstration pilot plant for years. And finally, because of the new approach to this project through Etango 8, we have a streamlined pathway to development that will meet sector deficits. And once we are able to get into production, we can then expand to meet widening deficits as this decade moves forward. So love to hear from you. Best to follow me on Twitter, but of course you can find us at our website, and you can also access some previous presentations on the uranium market and Bannerman Energy that I've had the pleasure to do with Broker Briefing. So Jane, thank you very much, and back to you.
Thank you for that, Brandon. As always, it's great to have you on. We've got a couple of questions, so I'll jump into them quickly. So how does the current uranium price change the financials of the Etango project?
Well, we've done our PFS on Etango 8 at $65. And whilst we aren't there yet, the spot price is around 50. Bear in mind that when the contracting cycle does start, historically, it's averaged about a 20% premium to the existing spot price. So we are starting to come into the range where we would get interested in the current uranium prices. It doesn't change our project. It just makes it an awful lot more attractive. What it changes from an investor's point of view is, first of all, there's the upside leverage. But secondly, for a long time, $65 didn't look too great compared to a spot price that was trading at $30. So I think what it's done for us crucially is I'm not getting the question anymore about, gee, is $65 reasonable? Is $65 realistic? The investment community now finally understands that not only is that realistic, but they're positioning themselves for an overshoot, hence why they're looking to us for scale and leverage.
Thanks, Brandon. And just quickly, so what should shareholders look forward to over the coming months?
Well, we're in the midst of our DFS on Etango 8. That's a fairly short definitive feasibility study because we've been there before. We've done a DFS on a larger scale project. We would have that completed by this time next year. And so because of that, that's the main focus within the company. And we are tending to trade really as an option on uranium. So I think the most exciting thing to follow is the uranium sector itself, as I say, knowing that we're a well-pruned option on uranium and we won't be taken from behind with any external company risks.
Wonderful. Well, Brandon, as always, thank you for coming on to Broker Briefing, and a copy of today's recording will be available online in the coming days. Thanks again.
Thanks, Jane.
So up next, we have a presentation from Aura Energy with the ticker code AEE. The company has just relisted on the ASX this morning with the share price re-rating. To tell us more about the company's Terrorist Uranium project in Mauritania, I will hand you over to the Managing Director and CEO, Peter Reeve. Good morning, Peter.
Good morning, Jane, and thank you very much. And thanks, ladies and gentlemen, to you all for coming on to listen to Aura today. It's a reasonably momentous day because this morning we have relisted, and it's been the first time in a little while that Aura has been seen on the exchange with a high uranium price. So I want to thank all the people over a long period of time who have got the company and the projects to this position. One of my favourite sayings over a long period of time has been success is where preparation meets opportunities. So it's a motto that we adopted in the company a couple of years ago, and we made sure that under that motto we could get the DFS completed. And it was a struggle because money was tight and things were difficult, but we pushed as hard as we could. We got the finance from wherever, and we made sure that we were ready at this moment when the uranium price came up so that all shareholders could benefit. So that's been what we've been doing, and everything's come together. The confluence is fairly nice. So we go to the next slide. Thanks, Jane.
Sorry, let me just pull it up for you now.
We talked there about advancing the project. Just on the front slide for a second, Jane. Advancing, the low operating cost Terrorist Uranium project. And the big thing I want to say is that the low operating cost and the low capex is what's going to drive Terrorist to production sooner than a number of our peers, from our opinion. Next slide. You can see here, after the reconstruction last year, we've got 396 million shares on issue. The share price in London at the moment is trading around, say, a 37-cent equivalent, and I see we're trading this morning at about 30 cents here, or a little bit under. So the market capitalisation in Australia is about $120 million. A point at the bottom of the slide there is that we will offer a non-renounceable loyalty options entitlement rights issue a month after this restatement, which is today. So that's something shareholders should look out for. Next slide. Okay, so these are the key points about Terrorist Uranium. We've got other projects within the company, but Terrorist is our focus, and Terrorist is the uranium project we think of most of the peers that could get into production very, very quickly. You can see on the left-hand side, low OPEX and low CAPEX, with a capital cost of 74 million and a cash cost, the C1 cash cost of 25. The capital cost has recently been restated, so that is now current for all the changes we've seen recently in the globe, particularly steel prices. So it's an up-to-date capital cost. We're probably the first one to have done that. The estimate, as you can see there, was completed in August 21. We've recently done a 10% resource upgrade. So we've got 17.4 million pounds in measured and indicated, but we've got an overall resource of 56 million pounds. And I think I'm going to talk a little bit later about that's the opportunity for growth within Aura, because we can upgrade that amount of measured and indicated over time. And we are in some discussions already with financing. And I think when we see this uranium price stabilize and we start to get to the point where we see a window through to financing, then we can push the button on this development fairly quickly. Down the bottom, a few important points. We've got a completed DFS. We've got both the environmental permits completed and the development permit granted. So we're ready to go. There's a few minor permits in an operating sense we'll still need to get, but the major 2 permits are granted. The government was very complimentary of our environmental statement. They said it's probably the best they've ever seen in the country. And given we've got BP and Chevron and some of the big oil producers in the country, it was quite a compliment to us. Because it's a small capital, and because it's a physically small plant, our time frame to development is very, very short. And I think that's our biggest benefit versus all the other groups who you might be looking to ride this uranium boom into the future. So that's an important one to note. And Mauritania it's an unknown country, but it's a great operating environment. And the US embassy was built there 3 years ago, $300 million. The French have got an embassy as big as Central Park. So, and a lot of kids going there each day for education. So it's a very well-established country. It keeps off the radar, and that's a good thing. It's only a small population, 3.5 million, and we find operating there very, very, very good. Next slide, please. Picture tells 1,000 words, and you can see there we don't have many neighbours. We don't have any communities. It doesn't mean we haven't done the right work environmentally to make sure we're set there, but we're permitting in a desert location. There's a lot of other stories here too. You can see an excavator has just dug a trench, so it's a free digging. It's a free digging material, so there's no drill and blast required in the mining of this. If I had a piece of that rock on the left-hand side of that trench, and I punched my fist into it, it'd fall into bull dust. So it's a very friable material. You can also see the carnotite uranium mineralization is very shallow. So the whole ore body here occurs between 1 and 5 meters. As a metallurgist many, many years ago, now a rusty one, we always used to hope we could get away with no crushing and no grinding. That's the case with Terrorist. So the saving in CapEx, the saving in operating is extraordinary. And the other interesting thing about it is that everybody would think that the desert, Sahara Desert, has no water. Well, we've just had some excellent water results as we've released. And, we believe we've got enough water for the project life as we stand right now. And you can see on the bottom right-hand side, just that profile of how shallow the mineralization is. Next slide. Thanks, Joan. One of our big benefits here is that we have this upgradable material. So very simply, we put 120 tonnes per hour roughly into a washing trommel, very low tech, very simple piece of metallurgical machinery. And then we screen the output from that trommel and we end up with very little of the mass, but most of the uranium going into the main and expensive part of the plant. And that's why you can see that only is 25 tonnes an hour as opposed to the 120 tonnes an hour into the trommel. So that makes our footprint, for the size of the plant, very, very small, where all the capital is expended. Next slide. I want to focus on just a few parts of this modestly busy slide. Shallow, flat-lying surface mineralization, we're 1 to 5 meters. This is what drives this low capex, low opex. The mining, cheap, it's free digging. Simple extraction, so 92% straight into leach. The carnotite comes out very quickly. I've mentioned most of those numbers in the second section there. You can see the all-in sustaining cash cost is under $30 a pound. And importantly, only 12.4 million pounds of the 56 million we have in the overall global resource is used in our DFS. We did this on purpose because we didn't feel we needed to do a lot of fine drilling to get the rest of the resource into a higher category before we get out there and start the operation. So there is potential to increase that conversion of the measured and indicated into mine inventory. And you can see some metrics there which are quite handy on the project size, the project cash flow. But again, I will say that those numbers, based on $60 a pound uranium, also only speak for about 20% of the resource. The potential upside that I see there is quite major. We're doing this opportunity review that I mentioned, and there could be quite significant cash costs, and we are working on that at the moment. I have Dr. Will Goodall, who's our principal metallurgist, and he's doing that work as we speak. The resource conversion, as I mentioned, that's the 17.4 million pounds in measured and indicated of the 56. We think there's upside there, and we also think there's still some potential for exploration discovery broader in the field. Next slide, please. Things that have been going on recently. This photo, believe it or not, they've been arriving on our desk every morning on WhatsApp in the last few days. So we've had some exceptional discoveries of water. It's like finding gold if you're finding water in the Sahara Desert. So we're very happy with that. And we really do think we're set for water now. So that's one great outcome. The next one is this Terrorist Opportunity Review to lower the cash costs. We've got vanadium as a byproduct in this ore body, and that goes into solution straight away with the leach. So that is one of the elements we're looking at to reduce the costs further from, obviously an already very competitive cash cost of $25 a pound. We've got a net zero emission study coming out from Wood PLC, and some of the other assets we work on. We've got the gold gravity survey complete and some drilling's underway there. So we're not just a one pony trick. We really tried to broaden our offering when the uranium price was a bit lower, and that's something else is an add-on for shareholders. Next slide, please. This has been changing quite quickly lately because of the market capitalisation, but we updated it this morning. And I think it just speaks to what we've seen as the sweet spot for where we wanted to place ourselves. We wanted to be really down the bottom end of that project capital cost, the bottom axis there. So that's where we are, the 74 million. So we are lower than many of the other companies. And then also in the market capitalisation. So we're sitting there about that 120. We took that off the UK market last night, and it's a true replication. So we offer a low capex, which allows the project to be very doable, and we've got a low market capitalisation, which means we've got a lot of upside for value generation for shareholders. Next slide, please. Just on the two other projects we have in the company, I won't dwell on it, but I just want to highlight it. We've got a vanadium project. Everybody's got a big vanadium resource, clearly, when we do all the marketing, that's what we talk about. But we've got a high-grade zone, and that's only 20 metres from the surface. It's a very small project, it's very compact. We're very happy with the study we completed about 12 to 18 months ago. We weren't able to release it on the ASX for some funny reasons about the size of our company versus the project capital, but we hope that can change soon. And it's a very compelling project with vanadium and a very good potash credit as well. We plan to spin it out somehow, and the Swedish government's driving a lot of this green metal revolution. So we think we'll get a very good hearing for getting this project underway in that country, and we will have a battery manufacturing initiative as part of this. Next slide, please. Back in Mauritania, in central Mauritania, we think we've got some of the world's best underexplored Archean greenstone belt. Archean greenstone belt is exactly what you find in Kalgoorlie. As we say, similar geology to Kalgoorlie without the crowds. Previously, they spent $3 million on it. We were able to buy that for $100,000 in a royalty. And the most significant thing here is the Tasiast 21 million ounce gold discovery is just 40 kilometres to the north of us. So we rate this ground very highly. We rate the project very highly. Again, it's not the key focus. Hagen's not the key focus now. Terrace is, and getting Terrace into production is the key focus. But this is a very, very good asset. And, on top of the gold, we have very good nickel discoveries, nickel finds and discoveries, intercepts, and we also have some very good cobalt hits. So it's an exciting project. And hopefully, both those projects, Hagen and the gold, we can, in a way, push to shareholders as dividends in the future. But they're sitting second to our myopic focus to get Terrorist into production. Next slide, please. My background is metallurgy, worked with some of the big companies, had been a fund manager in the past, and I ran founded with Robert Freeland, Ivanhoe Australia, and we ran that as a very large company for a period of time. Martin's been involved in startups as the current chairman, and a number of sort of early stage developments. And Peter Ward is a broker in the country, and I'm sure some of you would have come across him in the past. So that makes up the management team. I think we're at an end there, Jane. So I just wanted to say thank you to everybody. My summary really, in essence, is we worked really hard to get the company to a point where the DFS is complete in time for the uranium price to run. That's worked. We're really well poised. We're really well set. So I hope the shareholders enjoy it, and we have some good development discussions in the coming 6 to 12 months.
Peter, thank you for the presentation. We've had quite a few questions come through, so again, I'll jump into them. So do you have further drilling planned at Terrorist?
The most efficient way to drill, I can tell you, every time you go into the Sahara Desert, quite realistically, it's an expedition. We take out water tanks, we take out fuel tanks. So it's an expensive option. We think we've got enough to start the project at a very good size, and we will do more drilling when we're on site and when we start the development phase. We don't have any immediate plans to go out and drill in the short-term frame, but we are going to keep on looking at ways to expand that measured and indicated part of the ore body. We're also looking at a few other elements that we touched on in past years, where we had some very high-grade hits in hard rock in uranium just north of the project site. So we may go out and do some work on that in the short term. So we like the broader exploration. The project exploration can probably wait until we're out there and we've got a tent at least, or a donga or something we can live in. It's a bit hot out there.
Perfect. And so just another one. So when do you expect to finalize the financing agreements for Terrorist?
Look, too early to say. Needless to say, we are on it. And, I think we've got to see a good, and we've had a great presentation from Brandon on the uranium price. We've got to see a good, stable uranium price and hopefully higher uranium price, and we will focus on that more. We are having conversations and discussions with various people on that. Too early to conclude it and too early to say when that would be, but it's definitely on the agenda strongly at the moment.
Well, Peter, that's all we've got time for today, but congratulations again, and thank you for joining us on Broker Briefing.
Thanks very much.
So next up, we have a presentation from Elevate Uranium, a company with uranium projects in both Namibia and Australia. Unfortunately, Managing Director and CEO Murray Hill is unable to join us live today. However, we do have a pre-recording of Murray's presentation from yesterday. So let me bring up his presentation.
What an exciting time to be involved in the uranium industry due to the commencement of the uranium price rise, but also our growth as a company. The uranium and nuclear are becoming very much in favour around the world. People are considering the decarbonisation, electrification more than they ever have done. Now, decarbonisation is essentially generation of energy with zero carbon emissions. Electrification is basically the use of batteries. Now, batteries store energy, batteries discharge energy, but batteries don't generate energy. So both decarbonisation and electrification require reliable, baseload, carbon-free energy, and that's what nuclear power is. Now, at the moment, we've got we've had a sustained low uranium price over a period of time, and hence we have a supply shortage with mines going in care and maintenance, and some of the impacts of COVID last year in Kazakhstan and Canada. So we're now seeing a supply-demand issue where we need to increase supply to meet the demand of the current reactor fleet, but also future reactors planned and in construction. So even though we've seen a small rise in the uranium price over the last month, in particular, last couple of weeks, we see that that's still short of where it needs to be to incentivize uranium production. So we see that for a sustainable industry, the uranium price needs to rise, and if once it rises further, that's going to incentivize new production. So the use rate price and nuclear power is what we can't control, but what we can control, I want to talk about now. So we developed a strategy a few years ago in which we would acquire projects / tenements that meet a defined criteria, and we would explore on that large tenement position. And all this was underpinned by our upgrade application, which is our patented uranium beneficiation process, which lowers the cost base by in the order of 50% for these styles of ores that we've focused on. Now, instead of just talking about strategy, in fact, we didn't really talk about it. We just delivered. We went out and we bought 48 million pound of good grade resources in Australia. We've now got the largest tenement position for nuclear fuels in Namibia. We've had 3 discoveries over the last 18 months on that tenement position. And as I say, that the upgrade process is lowering the cost base. So that really is the incentive and the catalyst for us to go and explore and acquire projects. So at a good time in the industry when the uranium price is starting to move. So let's focus on Namibia. It's a world-class uranium province with an established uranium mining industry. Rossing has been there since 1976, continuously operating. It's an area where we have the Mariniki Uranium Project. It's a 61 million pound resource. We've used upgrade. We developed upgrade on the Mariniki project. It beneficiates from about 100 ppm to 5,000 ppm on that project, and lowers the cost base of capex and opex by 50%. So that's a calcrete-hosted paleochannel mineralisation, and what we're targeting in Namibia is that style of mineralisation. We believe that the uranium is leached from the highlands in the east out of the granites over millions of years and flowed down through these old river systems, or what we call paleochannels. And when the conditions are right within that paleochannel, the uranium is precipitated. So that's what we're looking for, generally less than 30 metres deep. So it's not expensive exploration drilling for us. And as I said before, we're the largest tenement holder in the country for nuclear fuels. And due to the time constraints today, I just want to focus on the Namib area down the bottom of the map, down the south of this map. This is where we've had a lot of recent activity and recent success. We've got a contiguous land package there. We've discovered the Koppies, Hirabeb and Namib projects, all recently in the last 18 months. Why do we pick this area? We picked this area because that paleochannel system we talked about flowing from the east to west towards the coast, we know that there's greater than 270 million pounds of resources in 3 deposits of Langer-Heinrich, Tumas and Oceananas. They were all found by General Mining, who morphed into Gencor. And General Mining also identified additional exploration potential in the areas, which is what we've focused on. So we've got, as I say, we've got this success. We've gone, and then because it's such a large area, and the Hirabeb project is 44 kilometres east to west and 22 kilometres north to south. So that gives you some sort of aspect on the scale of this area. We've gone and completed an airborne EM to understand where the paleochannels are. The airborne electromagnetics picks up the difference between the bedrock and the paleochannel, and has identified a number of paleochannel systems through here. So that's given us a bit of a heads up on where we need to explore, and our exploration team are working on that right now. So as I say, great success here, and we expect future success to come. So just moving across to Australia, we picked up a suite of Australian projects back in late 2019, December 2019. In fact, all of these have been held by Paladin, apart from Thatcher. So they sold it in 2016 in a fire sale when they went into a voluntary administration. A private company picked them up. We picked them up off that private company. We paid 4 cents per pound of uranium resources in the ground. Now, I'll take you back to when I consulted to Extract Resources. They sold the project, the Husab project in Namibia, for $4.50 per pound in the ground. And the Chinese have just recently done a deal with a Kazakhstan mine to pick up 49% of that for $8 a pound. I'm not suggesting we're $4.50 or $8 a pound, but what I'm suggesting to you is that 4 cents a pound is absolutely dirt cheap, and we picked up these for a steal. So in the last couple of months, we've announced, or just like this week, in fact, we announced to Uberguma, we've got an exploration target of 26 to 52 million pound. So we could, just converting that to resource, could potentially double our 48 million pound of resources in Australia. So that's a fantastic outcome for us. And the Angela project, its impediment to it being developed years ago was a high acid consumption in the order of 100 to 120 kilos per tonne. And at 40 cents a kilo delivered to site for acid, that's $40 to $48 a tonne just for acid costs. What we've done is we've done a small test work program on it with our upgrade process. We've reduced the cost, reduced the acid consumption by 80%, so lowered the acid cost by 80%. So that's a huge benefit for that project. So we're both adding value to these through our IP and also through geological work. So significant improvement in asset value expected in Australia. So upgrade, we've talked about a little bit. What is it? For us, these projects in Namibia and Australia are high quality assets. When we add upgrade to the top of it, that really is the icing on the cake. It takes the value of these assets to the next level. It's a process, a beneficiation process that rejects greater than 95% of the mass prior to leaching. It's demonstrated on the Marineka Ore project to take it from 93 or 100, call it that, to 5,000 ppm, so 50 times plus. And it rejects the acid consumers, and thereby we can take this concentrate, the upgrade concentrate, to an acid leach. It's a process we've developed ourselves in conjunction with CSIRO. We have 3 patents in place over this process, so it's protected in that respect. Now, the benefits of it, when you produce a very low volume, very high grade concentrate from these ores, it gives you optionality. You can take that concentrate off site and leach it at a third party refinery. Hence, you don't need to build the refinery or the tailings dam and associated reagents. So that lowers the cost base even further for CapEx from 50% down to potentially half of that. So that's the optionality we see. Otherwise, we can go and leach it on site. So, if we've, and also low grade projects, we can use our upgrade process on that because of the lowest cost base, or smaller projects, we can do that because we don't have to build a refinery. So it really gives us an edge over our peers, and it really is great optionality for us for project development. So it's a process that nobody else has. So, we're pretty excited about what it does for the company and what it's expected to do in the future. So just the corporate snapshot, we have a small board with extensive uranium experience on that board and management. We've got a small number of shares on issue relative to most ASX companies, and we've got cash in the bank, a fantastic position to be in at the moment. And, we're spending some of that on exploration and improving value of our Namibian assets and Australian assets. So a good spread of, in our share registry, no major shareholder that holding significant quantities. And skin in the game from the board management, we've got 6% between us, and we're very much vested in what we're doing. We believe in where we're going, and we're looking forward to continue addition of value to shareholders. So just in summary, we've got this fantastic position in Namibia, the largest land position for nuclear fuels. We've got success over and above our 61 million pound resource at the Marineka Uranium project. We've got 3 discoveries at Copies and Hitabeb, Namib 4. We've picked up 48 million pound of resource in Australia. We've already demonstrated how we can add value to those through upgrade and also a bit of geological application, and now got an exploration target on Uberguma that's nearly the size of our resources. And we've got this upgrade beneficiation process, reduces capital by half, reduces operating costs by half. So it really is the differentiator between us and our peers, and sets us alight really, and is a catalyst for us to build this company. A good team in place, and what better time to be in the uranium industry with the need for baseload carbon-free nuclear energy really high up in the agenda now, and decarbonisation, electrification really in progress. So thanks for your time, and thanks for listening, and I look forward to any questions. So just in relation to news flow over the next 6 to 12 months, we've done the airborne EM survey in Namibia over the Namib area. We've got drilling programs planned around that. We're looking at what other value add we can do in Namibia. as well around that exploration efforts. And also, the Australian ones. We've, announced, what we can do with Angela and the exploration target around Namibia. So we've got a fair bit of activity, and we expect to announce a few things over the next 6 to 12 months in particular of increased exploration success in particular.
Thank you, everyone, for listening in to the Elevate Uranium presentation. For any questions that you do have, please feel free to reach out by the contact details on the bottom of the ASX releases. So next up, we have a presentation from GTI Resources with the ticker code GTR, a company focused on its Henry Mountains Uranium Vanadium project in Utah. To tell us more, I will introduce you to Executive Director Bruce Lane. Hello, Bruce.
Hi, Jane. How are you?
Very well. Let me pull up your presentation.
Thanks, Jane. Look, Jane was correct in saying that we were focused on our Henry Mountains project, uranium project in Utah, and we are planning to continue with that. However, we're in the process of acquiring a new ISR uranium project or series of projects in Wyoming in the US. So next slide, Jane. And you can, yeah. So look, in summary, what I'm going to run through today is the location of the projects in Wyoming and our focus on ISR with these projects. They're sandstone hosted roll front projects, and they've got pretty compelling exploration potential. ISR in the US was commenced in Wyoming, and I'll talk about that a little bit more. We're targeting economic mineralization, and we've got a strong team who've got discovery experience, and we believe that they'll be able to bring that to bear on the project. So next slide, please, Joan. So look, before I get started on all that, we've heard a lot about uranium and what's happening with the price and what's been happening in general with the move towards clean energy or emissions-free energy in the world. So I won't dwell too much on all of that, but what I'd like to talk about a little bit more is why the US is a bit different and why we're really interested and focused on what we're doing there as a jurisdiction. As I said, I won't talk about the supply squeeze in general, except it's pretty self-evident from the price that is being brought to bear at the moment, or it's coming to a head. I think $50 a pound plus starts to make a lot of projects look a lot more interesting. The US opportunity is compelling. Nuclear energy is obviously a massive part of their energy supply, and they are the largest consumer of uranium on the planet. And what's interesting is that since what was a massive boom in exploration and development in the States in the 70s and 80s, there's been a collapse in their industry in both mining and exploration. And if you look at recent statistics, you'll see that there's been virtually no uranium produced, or very, very little in North America in particular, and in the US. And exploration, has in turn obviously collapsed as well. However, we believe that is, as we speak, turning around, not just because the uranium price has picked up in the last month or so, but because the US has realized that strategically nuclear power is extremely important to its future, and in turn so is uranium and the enrichment and value add cycle for uranium. So 50% of US clean energy comes from nuclear, and it underpins their ability to achieve their emissions targets going forward. They simply will not achieve the targets if they retire their nuclear power and nuclear reactor fleet. And next slide, Jane. You'll see that Jennifer Granholm, the new Energy Secretary under Biden, has made some very, very strong statements, and almost on a daily basis at the moment is espousing the benefits of nuclear power in terms of achieving the US's climate objectives. And I think Brandon earlier alluded to the fact that some US states, and Illinois is probably the most notable recent state, has reversed its decision to retire its nuclear power plants and is going to support them going forward. So that's a very strong signal that the nuclear energy business in the US is going to continue on and probably grow. Next slide, please, Jane. So we're targeting the development of ISR amenable uranium resources in Wyoming. Next slide. We've acquired some projects that are in the Great Divide Basin in Wyoming, and you'll see from this map that there's a significant number of large companies that have been mining uranium via in situ recovery technique in Wyoming. As I said earlier, it started in the 60s and really was hit its straps commercially in the 80s. And there are 7 operable facilities in Wyoming, and there's 2 more licensed. So next slide. The projects that we've acquired, and there's you can see them on the map here with the Thor claims, Loki, Wicket, Odin, Logray. They were selected, Branca Resources that we've acquired, selected these based on their proximity to the redox, the known redox front, and with the help of Doug Beam and James Bauman, who I'll talk about a little bit in a minute. So the projects were selected because of their proximity to the redox boundary, but also with the guidance of some historical exploration information from Kerr McGee, and also because of their location in close proximity to UR Energy's Lost Creek ISR plant. And UR Energy claimed that to be the lowest cost uranium producer outside Kazakhstan, which is a pretty big claim. So we think this is very fertile ground to commence exploration. Next slide, please, Jan. So we're in the process of confirming permitting in conjunction with Branca. We're due to settle on the acquisition soon, but we'll be working with Branca closely to get the exploration permits in place for around 15,000 metres of drilling, which we hope to kick off before Christmas. We like this Thor project. Water table's pretty shallow here, and we believe from the historical information that we have that this is the most fertile ground of the package that we can get kicked off on. Next slide, please. I've touched on a few things on this slide already, but the Great Divide Basin is probably the least explored and developed of the basins in Wyoming, and pretty much as long as these ISR deposits are below the water table and the geotechnics are favourable, they're amenable to low-cost ISR mining. Generally speaking, in Wyoming, the lixiviant used is alkaline. I know that there's been quite a lot of experimentation with acid leach, but alkaline seems to be the most favourable. So that combined with IX makes the process quite relatively environmentally friendly. It's notable that Wyoming has been a massive coal producer and thermal coal electricity producer over the years, and that business is obviously in decline. Bill Gates and Warren Buffett through Pacific Corp have identified the opportunity to build a nuclear power plant on an old coal-fired power station site, and they've announced that that's their intention. Wyoming's very supportive of both uranium mining and obviously the energy business. So we see a strong future there in the nuclear business for Wyoming. Next slide, please, Jan. So I touched on the discovery team before. Doug Beam has been at it in Wyoming since the 70s and worked for most of the majors. He discovered the Jab deposit, which if you were to refer back to slide 2, you'd see the Jab and Antelope deposits, which are uranium-1 deposits. Doug discovered that and has a very illustrious career in both exploration and mine development, rehab, and what have you in Wyoming. And James Bauman similarly has a good, strong history in the Red Desert in Wyoming, having built High Plains Uranium and sold that in 2006. Next slide, please, Jan. And so, look, the acquisition was announced a few weeks ago. We're in the process of working through the due diligence, and we've lodged a notice of meeting to approve the issue of the shares. So we think that we'll be in a position to close the acquisition and move on by the end of October. Next slide. We've just completed part of our capital raising program, $2 million placement. We also had around $900,000 worth of options exercised during the week, and a non-renounceable rights issue prospectus has been sent out, which will raise another $1.5 million. There's also a free attaching option on a 1-for-4 basis with those capital raisings, with a 3-cent strike at 3 years, and we'll be looking to list those once the rights issue is closed. The vendors have also put their hand up for a placement of $600,000, which will get completed at settlement as well. Next slide. There's a corporate summary there at 3.5 cents. We've currently got a market cap of around 30 million at the end of the transaction. If we sustain that share price, it'll be around 40, and we'll have around about $6.8 million in the bank, and then there's some acquisition vendor fees to come out of that as well. So we'll be left with a good cash balance in order to support our exploration activities. Next slide, please. So look, what should we be looking forward to? As I said earlier, we should be in a position to close the acquisition around and settle on the acquisition around the end of October, which with the drilling permits in place should allow us to drill prior to Christmas. Things get pretty cold in the desert in Wyoming, in the Red Desert, but we're hopeful that we'll be drilling before Christmas with some results in the new year. And just to note that we are also continuing an exploration program at our Utah projects, which are down the road from Energy Fuels White Mesa Mill, and we'll look to provide a bit more detail to shareholders on an exploration program that we'll get into before Christmas. Thanks very much.
Bruce, thank you for the great presentation. We've had quite a few questions come through, which you've already answered, but it is about your ISR based on either alkaline or acid. Maybe you want to touch on that again. Yeah, look, until you actually get into the development process, it won't be certain, but it's likely to be an alkaline leach and an IX process, so no solvent used. So it's part of the attraction of ISR, and particularly in the sandstone-hosted uranium, is that the impact on groundwater is very low, and generally speaking, it's a low-impact mining activity. So we look forward to getting into that. And finally, Bruce, it seems like you're well funded, obviously, with the placements you've recently done. What are you most excited about, and what should shareholders be looking forward to? Look,
I think we're clearly focused on defining a resource there in the Great Divide Basin, and we're targeting doing that early in the new year. So we're not talking about doing it in 6, 9 or 12 months' time. We're looking for a positive yield from this first drilling campaign. So that's what we're really looking out for.
Wonderful. Well, thank you for joining us on Broker Briefing. We're looking forward to some further updates.
Great. Thanks, Jen.
And of course, a copy of today's presentation will be available online on brokerbriefing.com in the coming days. So next up, we have a presentation from Delecta Limited with the ticker code DLC, a company exploring its Rex uranium project in Colorado. To tell us more, I will now hand you over to the Managing Director, Malcolm Day. Hello, Malcolm.
Hi, Jane. How are you? Thanks for that.
Great. That's all right. Let me bring up your presentation.
Great. Oh, very good. let's just jump straight through to, I think it's page 3, Jane. Yep, there you go. So look, the company acquired the project back in June last year. Things were looking quite good for uranium. The outlook was quite positive. We did an initial rock chip sampling field program, produced some great results. We had an average grade of 0.22%. But then things changed a little bit for the outlook. But let me go back a few steps. So we acquired 60% of Sunrise Minerals back in June last year. That company owns the Rex project. Consists of nearly 5,000 acres, or circa 5,000 acres, which is about 20 square kilometres. So it's a large land holding. It's located within the Uravan mineral belt, and that Uravan mineral belt is well known. It's got a rich history of uranium and also vanadium mining. It was actually, they mined both uranium and vanadium from late 1800s. But then it was 1952 when Charlie Steen hit about, I think it was a 21-metre intercept. And that put Moab and the Uravan mineral belt on the map with the uranium boom, 1952. Since then, it's had extensive uranium vanadium mining. That's come and gone with the ebbs and flows of uranium price. But look, we're in a great location. The project's essentially a brownfields operation or project. There's 4 historic mines on the project, and so the project stalled last year, probably because, or primarily because, the price of uranium stagnated. And in fact, there was a number of analyst reports come out not long after we acquired the project, and most of them forecast the price of uranium to stick around the $30 a pound sort of mark. So we never did a lot of work on the project, but of course that all changed earlier on this month. Obviously we'd Sprott in the market buying uranium. The price has shot up to circa $50 US a pound. We've had another surveyor and a geologist back out in the field, and they've done another program of field mapping and rock chip sampling. We've submitted those samples off for assaying, and we'd expect those results back sometime next month. So that's a quick snapshot. So can you jump on the next slide? Thanks, Jane. Okay, so I'm obviously the managing director. I have about 16% of the company, so I have plenty of skin in the game. My friend Brian Hughes is the chairman. He's doing a great job. We've got just over 1 billion shares on issue at the moment, and at 1.4 cents caps the company at about 16 mil. We've got about 2.6 million in the bank. We've got a small shareholding in European Lithium, which I'm a director of. Today's value is circa $1 million, so we've got about 3.6 mil cash or cash equivalents. We think that'll fund us through to at least past our first drilling campaign. Ideally, we'll get another surveyor and a team, geological team, back out on site later this calendar year. Their objective will be to continue with the field mapping, continue with more rock chip sampling. They'll take a scintillometer out and a XRF as well. There's a lot of outcropping vanadium, which is quite fortuitous, because where the vanadium is, there's also the uranium, so it's pretty easy to pick up mineralisation to a certain degree. But they'll be back out in the field. We'll do another, that field program will be completed before Christmas. Assay results should be back before Christmas for that program as well. And then obviously we need to sit down and do some desktop work to look at structures and potential mineralisation, and we'd be aiming to come up with a drill targets, or set up drill targets early next calendar year. Can you pull up the next slide? Thanks, Jane. Okay, so just going back to again the area. I mean, it's in a world-class region, known mineralisation. It's got a rich history of uranium mining, high grade. The grades are much higher than a number of the projects here in Australia. The historic grade in the Uravan mineral belt is 0.24% for uranium oxide, and 1.25% for vanadium. Vanadium, I think, is currently around $8.70 US a pound. so it's quite possibly almost economic without the uranium, but it's a significant vanadium credit. Now, one of the advantages of being in that area, we'll come to the next slide in a sec, is having the White Mesa Mill as well. Can you bring up that slide? Thanks, Jane. Okay, so the White Mesa Mill is within trucking distance from our project. That's owned by Energy Fuels. They're currently running on about 10% capacity. So they have about 90% spare. They're open, or they're amenable to toll treatment. So it leaves us in the enviable position, I suppose, of if we're able to define an economic resource that we don't have so much of a capex to get it up and running, we can simply truck it down to White Mesa Mill. Jump to the next slide. Thanks, Joe. Okay, so this really just covers off the results of our initial rock chip sampling exercise, which was conducted June, July last year. So again, the historic grade for the area is 0.24% uranium oxide. Our rock chip sampling exercise returned an average grade of 0.22% and a maximum grade of 0.5%. But again, they're generally a lot higher than the grades you see here in Australia and also in Africa and Namibia, etc. as well. Let's jump to the next slide, Joe. Again, just recapping the White Mesa Mill. They're running at 10% capacity. And they're within trucking distance of our project, so fortuitous. Next one, thanks, Jane. Okay, so we're in the Uravan Mineral Belt. We're in a world-class jurisdiction. We don't have any problems with BLM there, which is very handy. That belt, the Uravan Mineral Belt, historically has produced 86 million pounds of uranium since the late 1800s, and again was put primarily on the map in 1952 with Charlie Steen. The closest city is Moab. They have a lot of experienced personnel through there. It's pretty easy for us to utilise those guys. We've got a team with a surveyor and geologist on the ground over there living close by, so that's also fortuitous. We're in the right place at the right time. It's a brownfields project, so we know there's mineralisation there. Our objective now is to try and define an economic resource. So that's where we're at in summary. Thanks for that, Jane. Let's move on to questions.
Thank you for that, Malcolm. Great presentation as always. So you've talked obviously about the rock chip samples going to the assay labs. Is there going to be any delays in that?
There shouldn't be. They've told us a couple of weeks. I've allowed 3 or 4 just in case. Obviously, with COVID, slows things down a little bit, but we'd expect results out early to mid next month, so soon. And as soon as we get those results, we'll sit down and review them in conjunction with previous exploration results, and that'll enable us to look at where to define or focus our exploration efforts for the next round.
Perfect. There's actually a question that's come through from one of our Twitter attendees. So does the company plan to acquire further projects in the area to expand the land holding?
Yes, that's the objective. We're currently reviewing a number of projects in the area as well. What shall I say at the moment? What shall I say? Sunrise Minerals is, we've got a great partner on the ground over there. He has been reviewing projects for the last couple of months, but certainly this month, he's obviously lifted the ante somewhat.
And just next one. So what's the next steps in the exploration strategy and what should shareholders look forward to? Okay,
so again, we should receive the results back from the assay results back from the last round of rock chip sampling next month. We'll make an announcement in that regard. We'll then get the team back out in the field before Christmas. We need to get out there before it starts getting a bit cold. And then, of course, we should have those next assay results back before Christmas as well. And the objective is to define drill targets early next calendar year and try and get a drilling program as quickly as possible. With the cash we have at bank, we think we have enough in there to at least conduct the first drilling pass.
Wonderful. Well, thank you for joining us today, Malcolm. And if webinar attendees do have any further questions, please reach out via the contact details on the bottom of the ASX releases. But thank you.
Thanks, Jane. Thanks, guys.
And thank you all for joining us today for Broker Briefing Uranium Investor Webinar. Recordings of today's presentations will be available online in the coming days on brokerbriefing.com. We look forward to hosting you next time.